This is not the bull market you're looking for. Look, things may not be playing out the way we'd hoped for in 2025, but what's lining up for 2026 is very interesting, potentially incredibly bullish. President Trump is at the center of it all. We are staring at possibly the most aggressive, coordinated, politically engineered financial market melt-up in history. Trump is stepping in with what might be the craziest economic plan ever proposed by a U.S. president. And it's a plan that could absolutely explode markets in the coming weeks and months. Trump has repeatedly stated that keeping financial markets at all-time highs is his goal. And you can bet Donald is going to do everything in his power to make sure this happens. Because the higher the markets go, the wealthier the Trump family gets. It is what it is, guys. It is what it is. Now look, we usually see presidents pretend the stock market is just a side effect of their good policy. They don't directly link it to their ego. But Trump is basically saying, markets go up because I say they go up. And this is his insane plan to do exactly that. First, he wants to eliminate income tax entirely. Yeah, zero gone, not just reduced, removed entirely. That's insanity if he pulls it off. That all be thanks, of course, to his tariffs. He said over the next couple of years, I think we will substantially be cutting or maybe cutting out completely income tax. Crazy. We could be almost completely cutting it because the money we're taking in is going to be so large. Now, that's a hell of a bold claim, and I have no idea if that actually ends up happening. But income tax currently accounts for 54% of total government revenue in the United States, so this is a very big, bold claim, and kind of one of those things politicians just kind of pull out of their butts, right? But if he does make it happen, that's a lot of money going into people's pockets. Two, and this is much more realistic to happen, by the way, $2,000 stimulus checks by the middle of 2026. Now look, the economy is not in a recession, very far from it, it's actually pumping. And it's not in a crisis. But while we are in the middle of a bull market, Trump is talking about stimulus checks, and a lot of people, Main Street, are hurting and could use a bit of help. Plus, the second they get those checks, they're going down and buying dog coins, ma'am. Now look, this is insane, but it comes at an important time in Trump's presidency. The midterm elections are happening in November, and he can't afford to lose momentum or sentiment. Already, he's struggling in the polls versus the Democrats. Here's $2,000, go spend it, buy something, made in America, right? Maybe people like Trump a little more then. Number three, pressure on the Fed to cut faster, cut deeper, and to stay looser, baby. Jerome Powell is out the door as Federal Reserve Chair at the end of May, and you bet that Trump's next appointment is going to be strategic and super dovish, so he can politically engineer the bull market from within. He wants somebody, when he calls him and says, you lower those damn rates, the rates go down. Okay, Trump's already made it clear that he wants the new chair to be supportive of his 1% interest rate wish. Trump says he has chosen the next Fed chair and will announce the nominee soon. But the prediction markets, and even Trump, seems to be indicating that the top pick right now, Kevin Hassett, previously on Coinbase's advisory council, a mega dove who wants super low interest rates. This would all mean big changes are coming to the Fed, and really the way that the Fed even operates, because basically it'll be a hand-picked puppet of Trump. 4, make America buy more stocks. Trump wants tax-free investing accounts to encourage investing, expand capital gains relief, and support for the U.S. equity markets as a national priority. Now, love him or hate him, he's clear about what he wants and how he's going to get it. And these policies will be landing on an economy that's already set up for another boom anyway. So I don't understand why Trump's plan doesn't just boost markets, but can actually explode them in 2026. You have to zoom out a little bit and try to look at the macro forces that are already in place and that will be amplified by everything going on here. But guys, before we get into that, I gotta tell you about this insane Black Friday deal. I know Black Friday's went for a few days, but they still got the deal going on over at Ledger. These are the best damn wallets in the cryptocurrency market. You got Bitcoin, you got Ethereum, you got Solana, you got XRP, and it's not stored in one of these bad boys. You're playing the game wrong, okay? You need to get yourself a hardware wallet, okay? Never been a better time to secure your coins because the deal couldn't get much better. Get one of these, Ledger Stacks. You'll get $80 back in Bitcoin exclusively using the link right down below me here. $80 back in Bitcoin to buy one of these, best security device in the market. This is the Ledger Flex, slightly more affordable option. You'll still get $70 back free in Bitcoin. If neither of these float your boat, you can also get 50% off the Ledger Nano X. Link down below. Stop screwing around with your security, take it seriously, buy a damn hardware wallet. Okay, the Fed's liquidity tap has started dripping a little bit again. Okay, they stopped quantitative tightening on December 1st. Doesn't mean QE starts immediately, but there's another rate cut also expected on December 10th, a few days after you watch the video. Inflation's at 3%. Rates are moving towards 3.5%. This means negative real rates. So markets have no choice but to chase yield, and the highest yield is stocks, tech, crypto. Second factor, we have exploding deficit. The US deficit is 6.2% of GDP. The 50-year average is 3.8%. The level has only been hit during global wars, financial crises, and pandemics. And to an extent, the US is in a crisis. They're in a debt crisis, and they are in a war, an AI war with China. But still, technically, this is peacetime fiscal insanity, and it only pushes asset prices even higher. 3, we have record stock buybacks. Companies are no longer just participating in the market, they are the market. With $1 trillion in buybacks by August 20th of this year, they're happening at a record pace. So 2025 could end as a record-breaking year, which means there's been a permanent demand for stocks, even if it's the company buying back its own damn shares. Plus, Trump's going to give, 25 million kids $1,000, plus other companies are actually start topping up those kid investment accounts. This is perpetual bid for the market, you understand. 4, the AI super cycle. Global AI CapEx spending is forecast to be $571 billion. Frick, man, that's crazy. It's according to UBS. What's even crazier is that's more than this year, which has been insane. We're seeing an earnings engine unlike anything in the last 30 years. Now, everyone's screaming bubble, Michael Burry's short, I get it. Okay, but if we add in Trump's plan of coming income tax, the stimulus checks, forcing the Fed to stay dovish, protecting asset prices at all costs, it's hard for the bears to make a good case here. Hard for valuation models to resist what's going on. Now look, does that mean things have to go up? It's a midterm year. Midterm years usually have big bumps in the road. Be careful. Could have a very bullish Q1, Q2, and still have a bad Q3, for example, before the midterms happen, and then markets get some clarity and things pump again. But look, let's be brutally honest. The regime that Trump is proposing is not sustainable. These policies break every long-term constraint that we pretend to care about. Fiscal responsibility is gone. Inflation targeting is ignored. Market discipline is dead. Central bank independence, lol. Right? The bill always comes due. So maybe Trump really does run it hot from here until his end of the term in 2028, at which point we may be facing like new Great Depression level shit. It's coming, probably sooner than people expect. Trump just doesn't want all this shit to happen on his watch. He wants to be remembered as the guy who juiced the system. Blame the next guy for the Great Depression. So the question is simply when. The uncomfortable truth every bear hates to admit is that markets don't care about long-term consequences. All they care about is liquidity flows in the short term, and flows are all pointing in one direction right now, up. Think about the alignment here. The Fed is turning on the liquidity tap. The Treasury is running crisis-level deficits. Corporations are buying back more stocks than ever, and they're spending more on AI CapEx than ever. AI is driving earnings up whether GDP grows or not, and the White House wants the market at all-time highs, and they're literally doing anything possible to make it happen. It's a matter of national policy. You cannot fight it. It's very difficult to short. You can't intellectually reason your way out of the insanity that Trump is unleashing on the U.S. economy. This is the closest thing we've seen to a centrally coordinated melt-up ever, basically. It's not a bubble, not yet, but a regime of sending prices higher. So what's it mean for 2026? It means markets could go way crazier than people think. Maybe we'll break the midterm election curse, maybe not. Maybe we get a nice pump and then the midterm election curse before we pump again through 27 and 28. It means crypto could see major inflows. It means Bitcoin all-time highs do remain a possibility despite what four-year theorists believe. It means that the everything bubble becomes the everything stampede. Will it end badly? Almost certainly it'll end more horrifically than you can possibly imagine. The bigger the excess, the worse the hangover. But right now, the incentives of every powerful institution are basically lined up towards one thing: explode markets in 2026, run the economy super hot to try to outgrow the debt problem, which is not going to work. Maybe it does. Probably not. Thanks for watching.